Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's PreMarket Prep. Spencer Israel, joined by Joel Elconin and Dennis Dick on the show today. A lot of movers, some follow-through from Friday's action. We're going to talk about a couple blockchain stocks. One of them, a big one that we've been talking about for a while now, IBM moving this morning off some blockchain news. We'll talk about that. Talk about some earnings. We've got Citigroup and UNH this morning. We've got some ratings as well, and two guests on the docket. First up at 8:15 is a new guest. His name is Jared Wesley. He is the co-founder of LiveTraders.com. And then at 8:35, we're joined by Nick Chahine, as we are every Tuesday. He's the author of Create Income with Option Spreads. Joel, how's it going this morning in the S&Ps?
We are up over 10 points here. Our low from our close from Friday was 88.75. We made a low right in that area. Nothing but straight up here. Pre-market high 0350. I have a target here of 0875, so still some room on the upside. Crude, big reversal here when it's high 64.81. Opened at 64.80, hit 81, and sellers came in immediately. Now trading down 77 cents at 64.04. Gold giving a little back as well, trading down 470 at 1335.90, and silver is in the red as well. So we are back here from a 3-day weekend. Let's bring in Denny. Denny, how you doing today?
Oh, rough trading again here. Not trading, but rough luck here. I'm on this run of 2-day bad luck, I will tell you. And we know I talked about on Facebook. I had Facebook held overnight just in my day trading portfolio on Thursday. Come in, my stock's down 4%. Nothing I can do about it. I eat the loss and move on. And, but actually on Friday, I traded really well. I kept fighting. When you start in a hole like that, you think, wow, you're ending up in the red today. It's just a matter of whether you can claw some of it back. Actually, on Friday, I ended up in the green. I fought all the way back from that huge bad luck of having, out of the blue news sting one of my stocks overnight. And I come in this morning and the same thing's happened here again. I mean, GE's had the run of imbalances. We know I've held GE in my day trading portfolio long for about the last 7 days. Well, today I'm giving a little bit of it back, or a lot of it back, because it's coming this morning. And obviously bad news here on GE, which Spencer will give you in a second. Stock's down 4.3%. So deja vu all over for me here again. I got to try to claw my day trading portfolio back from the gutter here, as it starts with one big loser when I have a stock trading down 4%. It was a big position for me too. I had some size on GE overnight. So it's going to be an ugly morning here, at least in Dennyville here on this Tuesday morning after I'm supposed to be refreshed from the holiday, but kind of bummed out about the bad news.
So did you just go crazy in Facebook and just trade 50,000 shares aside in Facebook, or did you double down on some other positions? Maybe trade some Baidu or Baba, or how'd you get it back?
Great point you're making. And so many traders, and I guess we're jumping right into lessons here, of trading in my 19-year trading career on a Tuesday morning. But I don't trade any different. I've traded successfully the same way for 19 years, and I stick to my system. So, these are mistakes that, I made early in my trading career, and a lot of traders will make early in their trading career. When they get down, they get a big loser, they double or they triple their size, or they start to get bigger. I got to get this money back. I don't think like that. You can't think like that. You just got to keep continuing to trade your systems, trade the opportunities. Sometimes it'll just work out. And actually, I just traded really well. I had some good calls in the pre-market. I had some good opening trades. And I just trade the same way I always do. I traded, good at the close as well. I was trading well even after hours. There was some action on Friday, and I was trading that as well. And I just clawed my way back, slow, steady, grinding my way back. No big winners, just slowly clawed my way back, and I actually got myself back to the green. I don't know if I can do it 2 days in a row because, again, I don't trade any different. So, for me to come back, I don't like to give numbers. I'm not going to give numbers on the show, for my size, but I had lost about, on the Facebook move, it was about 2 days of day trading for me that I had lost on that one move. So when I get 2 days worth back in one day, That means I had a really good trading day. It's the same thing again today. I'm down about 2 days worth of day trading right now. And that's how, traders should look at it. They should never look at the absolute numbers. They should look at how many days, do if you, I would just throw out let's say, you lose $2,000 on something, just a hypothetical example. And, you average making $2,000 a day. That's 1 day of day trading that you're down on that, random position. So that's the way I look at it. And I'd have to be down about 2 days worth of day trading on this GE position right now that I'm in. So it's going to be a little bit of a battle to get it back. I've actually almost sold all of my GE here because this is what I do. When I come in, I see, I'm down significantly. I see the headline. I don't sit there in the hope trade. I just, eat it and move on. That's what I did in Facebook. And, I move on to different trade and try to claw my way back. So that's the best thing you can do is just continue to trade your systems. Some people say, oh, when you're trading bad, you got to get smaller. I agree with that, but I don't believe I traded bad. I believe I just got hit with some bad luck. And luck is involved in trading as well. Like if you're holding a stock through earnings, well, that's kind of, you're asking for trouble, and maybe you want that trouble. Maybe you like holding stocks through earnings. Maybe you got a feel for the stock. Maybe you think it's going to have a good report. That's fine. That's a trading strategy. But if you're just holding something into a random news event, it's a binary event. It can go either way on you. But when you're holding a stock randomly and something random comes out, like the Facebook, news from Thursday night or the GE news from this morning, it's completely random. So that's just bad luck. Sometimes that'll work out in your favor. Sometimes it won't. So, you look at it and you say, oh, well, if you're down so much money, the other times, sometimes you're going to make money on those things. That's just random good luck. It's nothing really to do with your trading set. It just happens to be news moving against you on a position you held overnight. Right. I mean, it's an argument for day trading there too. Like if you're new, maybe you don't want to hold overnight positions because usually you don't have news coming out during the day. I'm an overnight trader. I'm an overnight day trader. I like to do the 2-day move. I like to do different things. I've been playing the GE for the imbalance play. That's had every morning. So there's different reasoning behind that. And when you do hold stocks overnight, you will get hit with news regularly. Sometimes it'll be in your favor. Sometimes it won't. The last couple of days, it's been not in my favor.
Well, I was buying the Denny coin on Friday, and I am buying more today. So just keep having those bad days. Spencer, let's go to the GE news, and that's some big news for the big company.
2 headlines here. One is they will incur a $6.2 billion charge on their Q4 results. The second headline is they are cutting their annual dividend from 96 cents to 46 cents, only the third time in the entire history of the company that they've cut their dividend.
They're cutting the dividend again.
Yes.
This company, so I will say, and I have this in my investment portfolio too, so I get dinged over there as well. But I try not to look at my investment portfolio, so it's not big of a deal. But here they are. When was the last dividend cut? When was it?
I want to say
November?
Top of my head, like November, but let's check.
And 2 months later, they got to cut the dividend again.
Let's see when their last dividend cut was. Yep, November 13th.
This company is an absolute disaster from at least, from a fundamental perspective. And now, I'm going on a rant here, nothing about, that I'm long the thing. Just the fact that you cut the dividend, 2 months later, you got to cut the dividend again. Come on, get your act together. Everything fell apart in 2 months on you further. This company is a mess. I wish I would have taken the loss, honestly, a tax loss. I really thought about doing it, but I'd been in G so long, and I was kind of happy. 2018 is starting to come back. I was like, yeah, maybe it was a good call not to take the loss. Well, boom, it's giving back, 3/4 of its 2018 gains here overnight. Cutting the dividend here again. This company is just a disaster.
All right, let's look at the pre-market trading. I'm kind of glad I bailed on it last week. I know it was a little bit early, and actually I had the options that went to the end of this week. So glad on that. Am I going to reapproach here? Young Luke is looking at this, and I think we see what happens. 17.25 was the low of the move. I don't know if we're going to see that today. I mean, already 3 million shares have traded. Your pre-market low is 17.85. So we'll see. Let it ferret out what's going to happen today. But to me, I'll wait maybe for the end of this week. If they don't beat it down, they don't take out the 17.25, they don't take it out of 17, then I think they might be able to shrug it off. So am I standing out here and buying this at the open at 17.50 or 17.97, $18? If I did, I would use that 1784.85 low, the pre-market low. Another thing you got to keep in mind is, everyone was like, okay, I'm comfortable now with GE. You got the 2-point run. A lot of people are going to be caught in this. And just the way Denny is thinking fundamentally, I mean, come on, you cut the dividend, then you cut it again like that. Do you even know what's going on over there? So big trouble. And you know what the funny thing is? I was looking at this on Friday. Strong market, and this was weak. So I don't know if anybody, had the heads up on this, but it was weak on Friday in a strong tape.
I don't know. It's just a mess. So we'll see how it responds. This is a huge day for it. I mean, if it can come back and respond and not, go down, it may test lows. So don't kid yourself. 17.25, 17.27 is in play here today. We've watched it drop 78 cents. I'm not saying it's going to do it, but don't be surprised if it does. That's the level of the next couple of days that it absolutely needs to hold. Starts making new lows on the move. And I mean, I always say when you got in the stock making new lows, you got to go. But overnight position, I'm almost out of it. So you can't hold these things. It was a day trade overnight. It's not working out for the bad news. So you got to get out. My investment, completely different story. Been in it for 18 years. Been an epic disaster, really, when you consider, I've said, well, I got a lot of dividends through the years, which, I did, but whatever. Still, it's been an unbelievable bull run since, for the last 18 years, and the stock has not really participated at all or is down since then. So anyways, geez, just a mess. There's better things to invest in out there, that's for sure.
All right, so some earnings here. Good bank earnings on Friday. Good bank earnings today.
Yep, Citigroup out this morning. We'll start there. See Q4 sales, 17.26 for 17.22 billion. So a slight beat there. The EPS $1.28 versus $1.19. So beat on the top and a beat on the bottom for Citigroup.
Stock trading up significantly here in the pre-market. These banks have been hot, even the ones that were trading down. So JP Morgan took a little bit of heat early on its report, and Wells Fargo was taking heat on its report. Wells Fargo still ended up in the red, but JP Morgan turned around and broke out and went to the green. All the other ones follow suit. Bank of America was trading up. Citigroup ended up breaking out through the 76 resistance area. Now it's breaking out through the 78 resistance area there as well. And Citigroup is off to the races. Now, don't tell me about all-time highs or anything on that, because we know that's up to $500 a share because they diluted the hell out of this stock back during the financial crisis. But if you were buying, in the last little while here, at least the last few years, you're pretty happy on your your Citigroup position here, because stock has been on a monster run really since 2016 when it got down to $35.
Tough call on this one on the breakout. Trading up $1.96 at 78.80. That is the high of the session. Pushing it up to test the paper out at 79. Then you got to think about 80 as a whole number as well. Coming back on the downside, its former all-time high in Citigroup. Not all-time high, excuse me, Denny. High of the move was 77.92. So if you're trying a little bit of a short here, not waiting for a gap fill from Friday, because you need to get all the way down to 76.96. I'd say, just ahead of that all-time high, maybe 78 even, 78.05. Another trick, if you do want to sell this or get out of some options, see where that pre-market high is and see if it can take it. But right now, looks poised to test $79.
One more before we just jump in, and that's going to be UNH, because it reported earnings here this morning, and it is trading higher here in the pre-market. This stock has been an absolute monster, not even for the last 2 years. Talk about the last 5 years. $50 stock back in 2013 is now a $232 stock. Talking a stock that's quadrupled in the last 4 or 5 years. Basically, it's doubled, and then it doubled the next 2 years again. Been a monster. Spencer, details.
Q4 EPS $2.59, which is an 8-cent beat on the estimate revenue of 52.06 versus $51.51 billion. So again, a beat on the top and a beat on the bottom. They also issued some guidance for the fiscal year. Came in higher than the estimate by about $1, and they're raising that due to the new tax bill.
Before we talk that, we got one more IZEA, or IZEA as they say in Canada, blockchain filter just broke 2 minutes ago here. IZEA announced its cryptocurrency and blockchain initiative. Stock is popping 35% in the last 2 minutes.
Before we do that, 237 pre-market high. UNH starting to leak though here, so the high could be in for the day in UNH. IZEA, boom, pop, 840. See if you get any kind of pullback, keeping an eye on the pre-market high at 840. Spencer, we are a minute late for our first guest.
That's okay. His name is Jared Wesley. He's the co-founder of LiveTraders.com, and we'll be right back with Jared. Welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick, and we're on the line now with Jared Wesley. He's the co-founder of LiveTraders.com. Jared, how's it going this morning?
Great. How you doing, Spencer?
Doing pretty well. So tell us what your strategy is. Does your strategy, whatever it is, differ in any way coming out of a long weekend versus like tomorrow morning from today?
No, actually, I think going into the long weekend, the strategy differs a little bit in terms of some of the longer term positions we're holding. If it's a very long-term position where we might be holding it for months at a time, then it wouldn't change much. But if it's a position where it's 3 to 5 days, then I'd usually close out those positions before a holiday weekend. But coming out of a holiday weekend, especially with earnings coming up, we're actually really getting ready to ramp up things.
So you're trying to close out some positions ahead of any long breaks. And is that just for every weekend, or just like a 3-day weekend, or even longer?
Mainly long weekends. And the reason being is we don't know what, the news is going to be, especially with some of these less known stocks. I mean, if it's a major name, major brand, it's not as big of a deal. But we just typically try to mitigate that risk by either lowering our share size or our position size, or just getting out of the entire thing. But again, most of that's just for the 3 to 5 day holds, not for a monthly hold or anything like that.
So we were talking about that on Friday, and then actually again today with GE. So Dennis, who's one of the hosts of the show, he was talking about his GE trade and how news hits it. You can't control whether it's good news or bad news if you're already in it. So hypothetically, I don't know if you're in GE right now, but hypothetically, like if you were in GE prior to this morning, how would you approach this morning's news?
If I were in GE and I held it over the weekend, I'd probably pray. GE, I heard a little bit of you guys speaking earlier, and as a broader note, I'm not a big GE long-term fan. So I think that's a shift that's on its way down. But in terms of how would I handle today's news specifically, normally anytime we place a trade, short-term or long-term, we always have a floor, a stop loss in. So if it met that threshold or broke that threshold, I would absolutely get out. Even if I thought it might bounce a little bit, I'm pretty firm with my stop losses. So if I woke up this morning and saw GE, which is just continuing its slide this morning, what are we down on GE? Something like 3.5% or something like that. I would probably just have to just grin and bear it and take it and take the loss on it, to be honest with you.
All right, let's talk about your broader trading strategy. I know that you trade very actively during the first hour of the day. Can you talk a little bit about what you're doing in that first hour?
Sure. It's a fairly simple approach. I know a lot of folks use indicators and moving average and all this. I don't. I just use the candlesticks and volume, and I'm looking at pre-market gaps most of the time. And then I take the gaps, what I consider a high quality gap, maybe a little shock value gapping over a red bar, over a pivot area. And I'll trade those from basically 9:30 to 10 o'clock. If I'm trading past 10:15, it's a little bit late. And the reason I'm able to trade so early is not just the shock value of the gap, but I also use pre-market charts. When I'll use the closing chart from yesterday and the opening chart from this morning, and that'll give me a little bit more information And then when the market opens, I'll usually take them on a 1 or a 2 minute trade. And I'm in and out fairly quickly. I'm looking for a 2 to 1, maybe a 2.5 to 1 pop, and then I'm gone.
But you're not trading pre-market at all, right?
Very rarely. Every once in a while, if I see something I just can't resist, but that's you could count that on one hand for an entire year. Usually no.
So then what are you doing during the pre-market session?
Usually around 9 o'clock is when I'll get serious about scanning. So I'll take a dollar gainers list or a dollar losers list, and I'll filter that list out. So there might be 400 or 500 stocks on there, and I'll filter them out in terms of the price of the stock, the type of gap it is. We rate our gaps level 1, level 2, level 3. The shock value the gap has, where it's gapping from, where it's gapping to, the volume, all that. And then I'll take that 300 or 400 list down to probably about 15. And then right around 9:25, about 5 minutes before the market, I take those 15 and I cut them again. I keep the 15 on the list, but then I cut down to about 3 or 4, what I call my favorites list. And those are the ones that you just can't miss, meaning when the market opens, you need to have focus. And those are the 3 or 4 that I will not miss. So I take it from 300 down to about 15 and 15 down to about 3 or 4.
Why do you only trade the first half hour or so?
Well, for a couple of reasons. I have a couple other businesses that keep me busy. And 2, I think personally, and I think this is something maybe in the last 5 years that's happened, the market's really quiet down now. I don't know if with the advent of ETFs, the volume in the market has definitely dropped a little bit. But I just think you can do very well in the first hour of the day, and there's no real reason to sit in front of your desk. And who wants to anyway for 6 hours? I mean, I know some people do it, but I would just prefer not to if you don't have to.
Jared, Dennis Dick here, and I completely agree with everything you've been saying. I've been a prop trader, break trading for 19 years. I can tell you, I went through all this. I used to sit at my desk. I was the one person sat at my desk right from the open, right to the close, even, pre-market to a little bit after hours to get that action as well. Sitting there for a good 8 hours every day. And, it worked well. Intraday trading was great. I would say until exact time you're saying, until about 5 or 6 years ago. And then it just seems to be like the big moves all happen overnight. You get some good action in that first 30 minutes, then just quiets down, and you're sitting there twiddling your thumbs. I twiddled my thumbs for so long, I finally said, the same thing you did. And so now I focus really a lot on the pre-market, a lot on the after hours, a lot on the open, a lot on the close. But that middle hours from like 11, I'd say 10:30 to like 2:30, that's just kind of chopped you up. There's usually not a lot of trends. I mean, you can always find some, trending stocks in there, but overall, a lot harder trading and a lot less money to be made. And a lot of times that's where I run my errands, or that's where I do some other things, during the day, and I focus more, I've kind of shifted my hours a little bit earlier and a little bit later and kind of middle of the day. And I know this is not just me. I've heard this from a lot of different traders as well. A lot of traders go to the gym in the middle of the day now. They do a lot of different things. So interesting to hear from another, trader like yourself saying the same thing.
Yeah, I couldn't agree more with it. And I've been on some big prop floors before. And I mean, they're the types of traders that will trade the open and then they'll come back and trade 3 to 4 o'clock. And I think clearing their head in the middle is actually productive for them. But more importantly, I see some of the traders that do spend all day, and I'm not necessarily knocking it. Everybody has a different approach. However, I mean, they look like they went to war by the time the markets closed at 4 o'clock. And they're like, man, you look spent. Whereas the other folks that take that 4-hour break, they look fresh. I think it's just more productive personally.
Yeah, there's a good point to be made there as well. So can you talk about, some of your stuff there? You say you really focus on the first 30 minutes there. I know you were mentioning a little bit about gap trading and some other things. Can you talk about some of your other strategies?
Mainly, I know sometimes this goes against what a lot of people teach or what they think, but I really like breakouts. And I don't care if it's on a monthly chart or a 1-minute chart. I'm a really big breakout trader. I prefer them on higher time frames because I think they're more reliable on a daily, weekly, monthly chart. But I like 3-bar plays, which is a kind of a momentum play that we have. And I really like breakouts. I do the majority of my trading on a 5-minute time frame or less. But I do keep some swing positions, mainly on the daily and weekly. For me, I kind of skip the core position and just flat turn those into long-term investments. So I either go from 1, 2, and 5-minute charts to daily, weekly charts where I'll hold a stock from, say, 3 days to 2 or 3 weeks. And then after that, I just kind of do the Warren Buffett approach with regard to long-term positions. I don't have those mid-level 6-month, 9-month positions that some folks hold.
Jared, let me ask you about a couple stocks moving here in the pre-market and kind of different charts here. And you said you do use the pre-market after hours time frame. Let's go to Citigroup. Good earnings. Bank stocks have been hot here. Just took out another whole number at 79.10. This thing extremely strong. Right? How do you use the pre-market trading for this one? Let's say you were long the stock. You came in, you felt good about the earnings here. How would you be using this pre-market chart to exit along or potentially try short?
So, for example, you're looking at the Citi pre-market. If I pull up the pre-market, say on the 5 or the 15, I see a little bit of a consolidation right around, what is that, 77, 80-ish, give or take. I would trade that right above 77.80. Now at 78.50, 79, I need a pullback to trade this thing. Like to me, that's the move it's put in. Now, obviously, we still have an hour before the market opens. A lot could change. But if this was 9:25 in the morning and this thing had just broken that threshold at 77.80, I would trade it above 77.80 at the open. But if it did what it's doing now, which is 3 bars above that area, $1.50 above that area, I would wait for a pullback. I think it's a little bit extended here. Having said that, because of the strength of the sector, because of the sheer amount of interest in the banking stocks lately, I would not short this thing. Certainly not yet, anyway.
Okay, let's take another chart here. UNH, good earnings, busted out to 237. But starting to leak now a little bit. Do you like this consolidation here to 232 area to attempt along, or you think, maybe try short at a higher level?
I like this area to go long. I see this. I'm looking at it, and this pullback here to that 231, 232 area that you just referenced. I like it. Now, again, we're an hour before the open, but if this was 9:25, I'd be looking at this thing somewhere around 230, 250 to get into a long for maybe a $2 or $3 spike. But again, I wouldn't short this either. Healthcare has been pretty strong as well. I mean, what hasn't been strong really, but over that daily threshold there of 231, what is that, 75, something like that, I think this thing goes higher. So this would just be an opportunity to take advantage of that.
We've been on the line with Jared Wesley. He is the co-founder of LiveTraders.com. Jared, thanks so much for hopping on today. Love the insight. Have a good day and good luck out there.
Thank you, Spencer. I appreciate it. Take care.
All right, 8:28 now, 2 minutes out from the opening NYSE imbalances. Where are we at, guys?
Well, there won't be any NYSE imbalances. Oh, yeah, 2 minutes away. Okay, I thought you were asking.
Yeah, S&P.
I'd be confused on that one, Spencer.
All right, S&P futures are holding up here, up 1150 at 0350 is your pre-market high. I got a target of 07. So if you think there's another 6 points on the bone here, that's my target on the upside. First time in a 2,800 handle. Who would have thunk it? Let's look at some other stocks. That's an interesting play in Bank America here, Dennis. I mean, I believe they have earnings tomorrow. Loving this off the Citigroup earnings.
What a move.
Yeah, look at this thing. 31.78. Now, if you were long, this, I know that you've had a couple good bank earnings. Aren't you getting your boost here, even if they come up with good earnings? You got to bump
really
up.
Ran up into it now.
Yeah,
I agree. And if you're playing it today, and if Bank America shoot through any size, already traded at 835,000 shares, but you still got to play through the whole numbers. I mean, I see 160,000 up there at 32. It's the next roadblock for the stock. Let's see what it does there. But man, this has just been an impressive run here for Bank America. Really, 2018. Really, you got to go back. I mean, this started when Trump got elected. Bank America, when Trump got elected, and we'll just go back out to the weekly, actually got to go to the monthly charts, on that day was approximately $16. So we have doubled now in just over 1 year since, I guess we got a year and a few months since Trump got elected. It's been an incredible run. And that's bank deregulation, was really what the driver was at. All the banks have had an incredible run since then. And if you're going to get, deregulation, it's going to help the banks.
All right, S&P futures still up 12 1/4. GE crawling back here, Dennis. Now over $18 at 18.10, down 66 cents. So some folks using the weakness in GE perhaps to cover some shorts or re-engage with the long now that we are above 18. That 1785 low is becoming more important now that we've cleared the hold number. All right.
What is the pre-market low?
1785.
Yeah, we'll keep an eye on that here too. I mean, 18 is key too. So see what it does always at the whole numbers when they haven't been there for a few days. It's on the comeback trail, so helping a little bit here. We'll see what they do. Maybe they buy it back, but I still think the company itself is a disaster when they've got to announce stuff like this a couple months after already announcing the disaster that they announced back at the end of November or the end of October.
Disaster on top of disaster. How are your balances looking?
What are you looking at? Balances, we're looking here. Believe it or not, G is a small buy imbalance, but that is going to flip because I think it's still our same person that keeps buying GE every day. And obviously have a lot of sell orders in there today because the stock's significantly down, but I don't think it's coincidental that GE is lifting a little bit here. It's 80,000 to buy. That's going to flip to sell, so don't get too excited here. There's going to be a lot of sellers here. GE has already traded the volume on it, 3.8 million shares. This thing's going to probably do more than 10 million before the open, which is absolutely incredible volume there. So it doesn't really matter what's in the book. It really doesn't matter what the imbalance. Well, I guess the imbalance always matters, but I'm just saying there's going to be a lot of sellers that come in here yet. Looking here, Citigroup, 129,000 buy. We know those earnings are good. If I was trading Citigroup just off of the levels, $80. I got to think about 80 being a key psychological level. Bank America, the banks are just so hot today. 791,000 to buy here in Bank America. It's trading up, like we already said, over 2% as well. Goldman's trading up $3. Morgan Stanley's trading up near $56. I'm going to go to the Morgan Stanley book just for a second here and see what I see, because that Morgan Stanley book could have some size kicking up there. I thought there might be something at 56. I'm not seeing that much, 11,000 shares. So, anyways, the banks are really strong here this morning. Merck is another stock that is standing out here this morning. I've been so busy with all my other positions, Spencer, I didn't even see what the headline here was on Merck, but I've got to assume it's a pretty good headline here on some type of drug because Merck is trading up, and that's helping my invest portfolio. It's one of the biggest positions that I do have. It's up 5% this morning.
I thought this was follow through from Friday. Hold on, let me check my.
It's Merck Keytruda. I just went and grabbed the headline. So Keytruda significantly improved overall survival, and you have it too. And you can read it if you want.
Yeah, I mean that I have what you have. The significantly improved overall survival and progression-free survival as a first-line treatment in combination with basically chemotherapy patients undergoing chemotherapy for lung cancer.
Big pop. Remember that Bristol Myers has the competing drug. So when it comes to this Keytruda stuff, so Bristol Myers actually traded down 1.5% on this news. So when you see, and we've seen this happen multiple times, where Merck gets a big pop on the Keytruda studies and gives it back. So I'm not getting all that excited here because we've seen this happen before. Just keep an eye on that stock. If it starts to show weakness here, it means that there might be some people willing to take some profits. That being said, we're in a technical gappy area here, Joel, because we came from 62 down to 55 in like 3 days back in October. And we always say what goes down quickly through an area can go up quickly through an area. That is exactly happening here in the pre-market. We're going back up right through the same area here. Thoughts on this as we kind of gap into a gap?
My thoughts on this, Danny, are that you are going to make up your losses and more by shorting Merck.
I'm almost thinking. I have Merck in my investment.
I don't care what you have it in.
You think I should be coming here and shorting
the Merck?
Oh,
yeah. Handle. I mean.
What's the high? What's the pre-market high?
61.95.
Oh, that's 62. I gotta look at the book. These are the setups we talk about, guys. You know, like when you have everything kind of, all your ducks line up here. I'll tell you, this Merck book is one of the thickest books I've seen. There is so much size everywhere in this Merck book. I mean, it's traded a lot of stock. So, we got to give it that. It's traded 972,000 shares here. So that's a big size. But I can see 100,000 at 59, 50,000 at 59 and a half. And you're like, well, how is that possible? 61 and a half. This is the New York book. This liquidity is not active here yet. 260,000 at 60. At 61, we got another 40,000, and then it just starts to, get less because it's getting so far away from the price. But now in the pre-market, so, okay, you got 500,000 shares worth that's going to try to hold the price down a bit. or trade 981. So it can open over all that stuff.
Not even gonna open
over 62.
No
I don't think it
way.
opens over 62. So if I get anywhere up near that 95 area again, I think you're right. I think I'd be playing it from the short side.
Dennis, this is probably not even going to open above 61.
Are you shorting in the pre-market?
No, I'm not.
Down dirty.
I want
it's so
you
much
to.
volume. I wish the thing had only traded 50,000 shares right now, and I'd say you're right. But it's already traded 982,000 shares. It's the only thing that scares me. This volume is huge, and I tell you, there's an iceberg buyer here at 61.55, and he does not move. So somebody is driving this thing higher. That's showing 500 shares, 61.55. They just slam them again, hit him. Not moving. Eventually, if he moves, maybe that's when stock starts to show some weakness. But this iceberg buyer here in Merck is serious.
Yeah, but what about all the people that held this? I believe that was October, maybe, or was that? I don't know if it was drug news, earnings, or a combination of both. You went from 62 to 54.5. You made a low of the move at 53.63. If you're a portfolio manager or long-term holder, 62 fills the gap. Actually, you need a gap fill here at 61.81. I mean, come on, give it all back, big tick stock, Denny. I don't know. We'll see what happens. I'm putting this one on the top of my screen. We'll see. I want
to see what does 60. Yeah, but try 62. Here
try
again.
62. If that doesn't work, try 62.5. But it's not trading.
Eventually get the top.
It's not trading over 60. It's not.
It's a big move, and we have precedence here. So I agree with you. I'm on the same side as you. This is a big move for Merck. We have precedence that Merck has given back these gains before. So that is the consideration. I tell you, somebody wants this in pre-market. It's already 1.5 or 1. Just trade another 100,000 shares while you were giving your piece there, Joel. Things got some pop.
We have
Nick Shahine's at the background though.
Yes.
Nick, what's going on, buddy?
I'm lurking.
Lurking in the background. Are you lurking in Merck?
Oh, you took it from me, Dennis.
No, I am not lurking in Merck personally, but I do review it for a whole bunch of friends and members.
What do you think then? What are you telling them? What are you telling them here on this gigantic open up $2.93, 61.59, getting back all those losses from October? Nick, if you're telling them to get long here, then we may just have to end this segment.
Well, it's a huge move up, so I can tell you, I don't like to chase runaway stocks, but Merck has had ups and downs, so you have to evaluate how this run up takes it, where this run up takes it, and how it compares to what happened last time it was there. So you have to see, at whatever, 61 something, 61.60. So that closes that big, gigantic earnings dip from last time. So it seems whatever happened last time, now they decided it's not the case. So from here, now we're back towards a pivot point of, say, sub 61, 62 area, which was a floor before this debacle last time on earnings. So it's time to ask yourself, what will happen on this pivot point? Usually pivot points are going to be battles. So it won't be as easy from here on up as it was to here. So if I'm not long, I'm not getting long like today. So I have to see what happens. But if I'm long, I'll book a little bit and leave a few runners. And that's about it as far as trading is concerned.
All right, let's move on to the other stock. Big news. General Electric gets off the mat. Right back down on the mat here. I know you've been skeptical of this thing. Here we are, buying opportunity, or is this GE's last stand here before we take out the 17.25 low?
Well, here's how I look at it from a perspective of this is an old wound. Somebody poked it. So I think it was based on the fact that it won't be getting payments from GE Capital, which was a 2008 financial debacle residue. So last year it had a whole bunch of bad write-ups, GE. So it got pummeled, and 17 seemed to be the line in the sand that they want to cross over. This is not a new headline from that perspective. We still think that it's a debacle. Dividend was part of the debacle, and this is a somewhat dividend-related headline. So if I'm long at 17-ish or at the lows, I'm not out on this headline. And if I missed entering at the lows, maybe I say I start to nibble at this headline. I'm not saying I am. I'm just saying what I think the market will do. So if I'm short puts in GE, I'm not covering them right now. So it's not time to panic on this headline, in my opinion, because nothing has changed. We know it's a mess. We know the dividend was in question, got cut, whatever. So there's no new headline here that the fears weren't here at late of last year.
All right, Nick, let's just move to the broad market here. You keep coming up with targets. They keep taking out the targets here. S&P's 2803.50 in the pre-market trading here. I don't know. I mean, I guess there's some happiness over South Korea and North Korea kind of buddying up here ahead of the Olympics. What are you attributing this rally to, and what are you adjusting your upside targets to?
I lost my upside targets. I mean, I don't have any upside targets anymore. I ran out.
Time to sell.
It's like, well, is it, my only concern in today's write-up in the morning, I said my only concern is that there is no concern out there. Even when there is a concern, this Friday, we're supposed to be seeing a debt limit. I know it's a stale headline, but nobody's even talking about it. So it's not even in the headlines. So my concern is that there is no concern. So I stay long, whatever. You saw my notes last week. I said I'm long the financials into earnings. So I'm glad I didn't close the calls there. The easy way to do it, you can pick and choose, or you can throw a blanket over the XLF. You could have bought calls. You could have sold puts to buy the calls. Spreads, whichever suits your risk tolerance better. So, pick and choose, like the dip with Facebook last week, I thought was an entry opportunity. We shared a long trade there. It's profitable into today. I could book some, leave some, whichever. So stay cautiously long, and there are ways to do it. Debit call spreads leaves you cautiously long. The only money you could lose is the money you invest into it. Then you can trim as it starts rallying. So it's hard to short just because I want to short something. So we're this high, but fundamentally, if you think about it, you hear all these headlines from all these companies investing into their employees, investing into themselves. It's going to hit the streets one way or another. Now the fact is, how much of it is already priced into the stock market? So it will take, I think it will take, I mean, at this point, we're not worried about anything. So it's going to take a blind side.
All right, moving ahead here. Big move in the crude oil market. We did hit a high earlier today, a new high for the move, 64.81. We backed off kind of a new range. Are you just waiting for this crude oil to establish new range here, Nick, or what are you looking at in the crude oil market?
Well, if you remember when we talked about crude oil, when it was stuck at around below 54, I said it won't go past that because of the thesis that I had on crude oil that, above that price is bad for OPEC's market share. Below 45 is bad for OPEC's pocketbook. And so the balance was somewhere below there. This tells me the last couple of weeks, what I'm seeing in the headlines tells me that the new regime there may have ditched that strategy of we're going to bring everybody to their knees other than, OPEC prices by keeping the oil depressed. So it looks like now they want the OPEC, mainly Saudi Arabia. That's what I meant by the new regime, by the way. They want higher prices, so they ditched the market share idea. They want to make more money per barrel. So now we're going to, go back to the battle of they're going to lose market share because now everybody else is going to be pumping at 70 or close to 70. So I'm no longer in the thought that, okay, the balance is below 55. So definitely I wouldn't short it here, but it's pretty dang high. So I don't know if I can chase it long. If I want to trade it, maybe I'd look at the USO and see if I can strike a balance there. But I'm not shorting much these days because it's been financial suicide to do so, and it's been very tricky. I got caught short a few Qs here and there, but I immediately covered by buying longs. So now I want them to run to no end, and I'll be happy camper. So it's hard to short anything just because we're this high. Anything.
Just talk about, so you didn't cover that short, you just let it go, but you offset it instead of taking the loss. You just figured, hey, I'll go out and buy something else, or did you take the loss and then go with the long?
No, but well, it's when I sell a credit call spread or a credit put spread. So I have a thesis that price won't get there, but if I see price coming and I act early. So I don't wait until completely lost before I do anything. I could close it and walk away with a wound. But if I see the momentum going the opposite of my thesis. I flip the switch and I say, you know what, I'm going to join the herd. So if I have a credit call spread losing money, I just buy more calls. And then you want it to run through your credit call spread because then you'll be profitable. So that's what I did.
Let's talk about Apple here. Big news a couple weeks ago. Some supplier tracker Apple phone shipments down. They hit the stock under 170. Now breaking out to new all-time highs. Share your thesis on Apple.
Okay, so Apple technically has room to go, so I would not short it here. It's the idea that it falls on somebody else's news is always a losing proposition in Apple. I'm not an Apple fan. All my friends know that. I don't like their products for me. Not to say that they're not good products. It's just not for me. But the stock is hard to short on somebody else's bad news. We have no idea what's going on behind the scenes, and Apple's been tight-lipped about that. And I don't extrapolate bad news from one company to translate into bad news into Apple. It's been not a good gauge. It's not, let's say it's not a reliable gauge. So technically, if you look at the Apple stock above 177.40, 177.30, has middle 180s written all over it, technically speaking. So I wouldn't go short it. So how to go long? You buy a debit call spread in it. You buy a debit call spread in the Qs because it's about 0.18 of it translates directly into the Qs. So there are ways of trading it safely. Earnings are coming up. Usually it likes to run up into earnings. Last week, I shared a long Apple trade based on that. On any red day ahead of the earning, if you want to do a lottery ticket into Apple, do it early because usually you can get out of it before the earnings hit with a profit.
All right. I was just thinking about the airline sector, and Jar's asking about American Airlines, AA. Share your technical and fundamental thoughts on American Airlines.
AA or AAL?
Oh, I'm sorry. I'm mixing things up. I was thinking American Air. He put AA in there. So let's go with his. Let's go with AA, and then we'll cover the airlines.
Oh, Alcoa. So technically, fundamentally, I don't know anything about it. Technically, for me, it's one of those too high here because I don't know its fundamentals for me. So technically, I don't have any clues on AA. If I'm long, I have no reason to get out unless there's a headline coming that I want to avoid. So kudos to you if you're along it. But even on the weekly chart, I don't see, I don't see anything that I can tell you from a technical perspective. The monthly tells me that 28.70 was actually, let's share that because that's the only clue I get for now. So on the monthly chart, so we're looking long term, so nothing like imminent price rise, but it should give you an idea, a better idea of levels and pivots and such. So $28 was the place where it fell apart, and I just lost my mouse. Okay, there it is. Way back in May, and something happened then on earnings, I'm going to guess, and it got repriced way low, and now here it is up towards that price. So you have to know the fundamentals and say what brought it down, and now that we're up here, how will the market react to it? The price action is bullish, higher lows knocking on the pivot point. So make your judgment there and go with that.
All right, now the American Airlines.
Okay, so I'm long airlines. I sold puts on dips. When everybody hated them, I sold puts. American Airlines, the monthly looks like a breakout, but although it could have already reached the upside target. So if I'm not long and I'm looking to go long here, I'm hesitant. But I'm long and I'm not looking to book anything. So it's kind of one of those things. If I'm not long, I kind of missed it and see what happens. They're not that expensive. I think last time I looked at them, so from the fundamental perspective, kind of like the banks, I said they've come so far, but they're still cheap, relatively cheap. So price to earning is under $15 for AAL. It's not screaming expensive. I don't know historically how much it runs, but from a valuation perspective, owning it is not a debacle at this level unless the market's correct. So,
all right, couple more for you coming out of the chat. Dr. J is asking about FireEye, FEYE.
Okay, so it's pricing in the giant debacle from the last earnings, which was in November. technically, it's looking decently aggressive. So maybe they want to go. What is it doing this morning before I speak anything like that? Let's see here.
Let me look too. I know I throw you under the bus sometimes on that.
Yeah, I know.
Up 20 cents. Up 20 cents.
Oh, okay. It's up 20 cents. All right, good. Thanks.
Still in that gap area.
Okay, so it's still in the gap. So, but before it fills the whole gap, there is a level at like 15.95 where it's failed a few times. Let me see if I can mark it really quickly here before I share the chart. So I want to see what it does there. And it is the matter of knowing the fundamentals. I don't think it's cheap fundamentally. I'm going to guess, take a wild guess there. FEYE, boom. And so it becomes a battle of the technicals at this point for me because I don't know its fundamentals. So if I'm long, I'm not booking my long. I want to see what they do within that rectangle I drew. And then, there would be another technical opportunity if they take out you know what? They already did that. So never mind that last part. So in a matter of when do I get off the bus? Unless I really believe in the long-term prospects of this company, want to hold the stock long, but they don't seem like the type of stocks that you want to do that to. So technically speaking, if I'm long, I stay long. If I'm not long, I could try a test along with a debit call spread and see what happens. But this is a danger zone where it's approaching areas where it's fallen before or failed at before.
All right, Merck's good news is bad news for Bristol Myers BMY. Trading down a little bit of pre-market off this news here. Any technical or fundamental thoughts on BMY?
Yes, both. I think I do have a lot of members, including family members who are members, and they sold puts last couple of weeks in BMY. So they believe in it. And these are people that actually know it fundamentally. So I will take their word that fundamentally it's sound. Technically, this dip makes it back off of the breaking the lower high trend that would have probably brought it to 64-ish and then some. So technically, I will watch how it behaves and then how it reattacks that descending higher low trend. And if it breaches it, it should be able to hit or attempt to hit 64, which was the level of which I would look at to get off of some of the longs, because it's a level where it's failed at before a couple of times recently in the December 4th and December 13th. So technically it has potential as long as it holds the bottom end, which is the ascending higher low trend. So price range is tightening. Usually it follows a break in one direction or another. So without a debacle to break down, it should break up.
All right, one more for you. Baidu, BIDU.
I thought that, any dips in Baidu were viable. And I believe I shared a few trades when it was falling supposedly to no end. And the company told us they were going to do better. So I have no reason not to trust them with that so far. I wouldn't short it. I could go long it on any dips, even in stable markets. I don't know when they report earnings, so I'd want to avoid that period of time, although, the reaction to earnings has been short-lived. If it was negative and if it's positive, it just runs to no end. So I would brave a few credit put spreads that are well-placed within Baidu, especially on dips. This morning, I'm pretty sure it's not dipping, so I wouldn't chase it this morning unless I'm chasing the whole market higher.
All right, one more for you. AFL, getting pounded. Oh. Yeah. What about this one, Nick? Let it sit for a day or two. I mean, maybe wait. Let's see what it's doing in the pre-market. A lot of news here. Got down 83.70 here. Catching a falling knife in Aflac.
What's it doing this morning?
I hit 83.70, back at 85.01. Flat.
It's up a little bit with the market.
Oh, okay. So I want to know why all these people are getting out at the drop of a hat. So I know it had a headline last week, some sort of there's investigations or something like that. So, boy, if you're catching that falling knife, you better play with the headline. So fundamentally, I don't know where it's at. If it's cheap enough and you want to gamble on the fact that this too shall pass from the headline perspective, for a regulatory perspective, then yes, this is a perhaps trailing 12-month price to earnings is not that expensive as like not even a teenager. It's under 13. So I'm not taking a long risk as far as valuation by selling puts in it or put spreads, but I better be sure that this headline is bogus or this headline will pass. So if I'm selling puts, I want to sell in the 83 area, because that was the floor of the last before they ran up. So they used that as the floorboard from which they sprang higher, say last November, late November. So this is where I'd be comfortable selling puts or put spreads, provided I'm okay with owning the shares if I'm selling naked puts or put spread. I could lose more money if it falls through that level, because it is a headline stock.
We've been on the line with Nick Chahine. He's the author of Create Income with Option Spread. Joins us every Tuesday to share his technical and fundamental thoughts on the market. Thanks a lot, Nick. We'll talk to you again soon.
Looking forward to it. Thank you.
S&Ps are tight range here, still trading above the $2,800 level, 2801.75. That's your last print. Denny, 4 minutes to go. Any change in imbalances?
I mean, there's so much news here today, too, on individual stocks. But yeah, the imbalances, a lot of that is just reflecting individual news. But, if you want to talk GE, still small buy balance. It has been crawling its way back. I actually lightened my position up a little bit more here at 1827 just a few minutes ago here, because the stock has come a long ways back from, that 1785 low you were talking about there. It's about 40 cents from the pre-market low. I think it's now time to lighten up on that loser that I had there overnight. Looking here, just Bank of America is 1.2 million to buy now. I'm going to keep an eye on that 32 level. I think it's big for Bank of America here. Citigroup will be your leader, though. So if you're trading any of the banks, keep an eye on Citigroup. It will lead all the rest of them this morning, obviously, because it has the news, it has the earnings, it has the big move up at 2.5% here this morning. I'm just going to look at the book in Citigroup once again to see if it's filling up at all here. 77.44, 77.75, 78. Oh, wow, is this a thick book? I mean, all the way up to 79. Citigroup's book is pretty thick, but again, it's already traded 700,000 shares, so it can chew through most of that. And if you just want me to give you the numbers, I mean, I'm looking at 70,000 shares at 77.74, 50,000, 77.74. That's a different number, actually. 78, 39,000 shares, 78, 44, 10,000 shares. You can tell when it's one player, when they throw out these weird numbers. So somebody's at 44, 74, even, and then the next channel, they're 44, 84 even. I mean, you can tell it's totally one institution that's lightning into this. They're selling into this gap up. And, the reason you can see that is because the stock's actually trading above those prices. So they're just, throwing out their orders there in, different increments at different size because they want to get filled on the gap up open. So some institution is lightening up here this morning. We'll see if, that's an indicator of where the stock goes. But I don't think every institution's coming here buying this morning. Some look like they're taking profits.
All right, 858 here. S&P's just off the highs of the session at 0350. Crude holding above 64, down 65 cents at 64.16. Whisker's asking
just before Whisker, we just had a Twitter upgrade just come through. Buy at Aegis up the price target to $30. And Twitter, if you look, just took off on that. So now it's trading up 1.5% the pre-market. I mean, this chart has breakout all over it. I think this thing gets about 26, and this thing's going to be off the races too. Full disclosure, I am long for a day trade here on Twitter this morning. I think this thing's going to see over $26 here today.
25.85. That was a high on Friday. That's the highest it's been since you had the high at 25.50, 56 in December. And just getting back to those areas, that we talked about when the potential, takeover news, that's where they popped it up to the $25 area when talks fell apart. You saw what happened, but right back, I have to agree with you on Denny on this one. Chance to break out over $26. Any other stocks here in
the one you were going to go to in the chat?
I saw Twitter. No, that was the one I was going to go to.
Oh, that was Twitter. Oh, Whiskers, he was doing the same thing. Me and Whiskers looking at the same thing. Nice call, Whiskers. I didn't even notice that from the chat.
All right, Spencer, 20 seconds left here. You want to wrap up today's show and preview what's on the docket for tomorrow?
Well, on the docket for tomorrow's show, we're joined by Frank Longman. He is the managing director for equity strategy at Seaport Global Securities. He was an equity strategist at Breen before that. So Frank is on the show tomorrow at 8:35. If you want to catch any part of today's show, catch our interviews with Nick Chahine or Jared Wesley again. Catch the podcast on iTunes, SoundCloud, and Stitcher. Just search for Benzinga or PreMarket, or go to youtube.com/Benzinga TV. All of these shows are posted there as well. But that's it for the show today, folks. Hope you all have had a good morning so far, and hope you have a good rest of your day. We'll see you guys and gals on Wednesday.